Are you confused about insurance and how it works in India? If yes, then definitely you are at the right place. I request you to completely watch this video without skipping it. Well, in my initial days, I confused insurance with an investment vehicle rather than its true purpose as a risk management tool. Led me to purchase policies that are not suitable for me, for my needs. Another misconception includes believing a policy covers everything, that long-term loyalty to an insurer guarantees that the best rates and the benefits for long term. Many of us, even have subscribed to insurance policy as a tax-saving vehicle. Over time I realized we completely misunderstood insurance as a financial product. In this video, I'll break down the basics, what insurance is, the different types of insurance product available in India, and how it can secure your financial future. So without wasting time, let's get started. First, let's understand the two main categories of insurance in India. Number one, life insurance. Number two, non-life insurance, also known as general insurance. We'll come to the various categories of insurance product available within these categories. Now, life insurance is all about financial protection for your loved one. If something were to happen to you, it ensures your dependents are taken care of, even in your absence. Non-life insurance, on the other hand, protects against everyday risks like health issues, car accidents, property loss, maybe fire insurance, travel insurance and more. In short, life insurance secures your family's future, while non-life insurance shields you from certain financial shocks in your day-to-day life. So, coming to this section, what is insurance? So put simply, insurance is a way to transfer your risk to an insurance company. You pay a regular premium, and in return the insurer promises to compensate you for specific losses like accidents, your physical illness, or even loss of property. The main principle here is risk sharing. Instead of one person facing the huge financial setback, insurance pools the risk with many people. Many people, we pay our premium every year, every quarter. So that's the pool insurance company have. And whenever there are crises to any of their policyholders, they pay them off from that particular money. So it's a pooled, risk mitigation tool in that sense. So everyone stays protected. It's all about being prepared for your life's uncertainties. Your risk can be managed by, I would say, 2 or 3 ways. One could be, which is not possible for us, just by avoiding it, choosing not to be involved in your day-to-day activities, which is not possible. Yeah. So second, retaining resources, a lot of wealth you have, and you don't care about the uncertainties, the difficulties that you face financially, and you can recoup, you can manage whatever risk may have come to you. That's another way. But that's not the case. That does not resonate to many of us, right? We are, let's say, many of our population are in the verge of, just managing their day-to-day life. The resources that they have are very, very limited. So we have to manage our risk definitely. So the third option, in my view, and we all agree to that the best strategy is to transfer the risk to someone else, so that whenever there is a crisis, they support you, they pay you financially. Now, in this video, we will focus on the life insurance side of it. So as we discussed, we have two major categories in insurance in India. One is general insurance and life insurance. So we will focus more on life insurance to understand its nitty-gritty. Now, what's the purpose of a life insurance? Life insurance ensures that if anything happened to the primary earner, the bread earner for your family, their family won't face financial hardship. It covers crucial expenses like child education, home loans, and your daily living cost. Some policies also help pay off debts or cover your medical bills. And certain life insurance plans even serve as long-term savings. Ultimately, the goal is, to achieve peace of your mind, knowing your loved ones will be financially secure no matter what. Now, depending upon the type of policy you bought, life insurance pays you off during life and even after life. During the life, payoffs are generally payoffs of your mortgage, child education, regular income, and after retirement. And after life, payoffs are generally nominee gets the sum assured amount after your death. And even in few policies, your family gets monthly pension. So we'll discuss that later. Concept of insurance, income insurance. This is the most critical part I want you to understand and focus more on. What is insurance? The expert says insurance is basically your income assurance. In case there is some problem, some setback with your regular monthly income, then insurance as a product protect you from just going bankrupt, and it ensures it pays you off every month so that you can do your expenses, you can manage your expenses on a day-to-day basis. A key feature of many insurance products, if you see, majorly life insurance products, are income assurance. This means making sure your family continues to have a stable income, even if you are not able to provide it yourself. For example, some life insurance policies or income protection plans pay out regular amounts or a lump sum to your family, acting as a replacement of your salary. This helps your loved one maintain their lifestyle, pay off your bills, and move forward with confidence, even during tough times. Insurance could not protect or make up your emotional losses. I totally agree. No financial product can do that. However, it does take care of your financial losses. It can mitigate your risks to a certain extent. Here is a detailed example of how a typical life insurance policy works. Example includes features of all the life insurance product, one by one, just for an illustration for you to understand the concept of income assurance. If you see this slide carefully, we started, it's a typical illustration of one of our citizens, let's say starting at the age of 25. Now, assumptions are annual income. Let's say you have an annual income of 10 lakhs rupees. Total income becomes 3.5 crores in 35 years, which is your life value in insurance concept, how they underwrite. So there are various terms they use internally. So for them, your life value is your monthly income multiplied by yearly, number of years you work, and you generate the same income, considering there's no increment in your income, just for our illustration purpose. Now, minimum insurance cover in this case, what you need is 10 times of your income, annual income, which is 1 crore. And that should be the minimum cover, the policy sum assured, if you go and buy an insurance policy. Thus, in the ideal scenario, what are the insurance requirement for this person? So actual insurance required, as we mentioned, the life value 3.5 CR, sum assured, which is your life value. Minimum insurance required is 1 crore, sum assured, 10 times of your annual income, considering 10 lakh as your annual income. Maximum insurance allowed by any of the insurance companies in India should not be more than 25 times of your annual income. That is 2.5 crore in this example. We will consider 1 crore as the insurance requirement to see what are the benefits at various life stages. Illustration covers the period from 25 years of age till death, your post-retirement era as well. You can see the various benefits provided in the policy. Examples: during 35 to 45 years, in case of an unfortunate incident take place, policyholder gets accidental death benefit and natural death benefit. What are the benefits there? He gets the sum assured, which was 1 crore. Remember, we discussed 1 crore in our illustration, plus accidental benefit and accumulated bonus on the policy. Most of the insurance policies you buy, it accumulates bonus year after year. Policies also offers permanent disability benefit, or generally the premium waiver, monthly income till certain period plus maturity benefit as well. Once the policy matures, let's say you bought your policy at the age of 25 and your policy matures after 35 years at 60 years of age. Benefits are: you get the sum assured, 1 CR in this case, plus bonus, and your various other benefits that you can already see. In some policies, the insurance cover continues after the policy matures. For example, post-retirement coverage till the age of 100 years. This is in addition to the maturity benefit that you already get. Other than these policy benefits, there are various other benefits being offered by the insurance companies. Now, one is definitely tax benefits, but this is just I would say the byproduct of what you actually get. And sometimes loans are also allowed against your policy. Numbers mentioned in this illustration are just for our understanding. Not correlated to any specific policy available on the market. So this illustration was to let you understand how it works, what are the benefits that you get in a typical life insurance product. Now, coming to the types of life insurance products we have. Finally, let's look at the main types of insurance in India. So term life insurance. When we heard this term life insurance, it was confusing to me, but we understood this is not a policy, this is not a product that can generate capital appreciation or profit for us. This is a pure protection, right? Financial protection. And for a set of period. Now, it is affordable, but only cover risk of death during the policy term. Whole life insurance covers you for your entire life, guaranteeing a payout whenever you pass away. Endowment plans offer both insurance and savings. Money is paid out either on the maturity or to your nominee on your death. Now, there are certain market-linked ULIP, the insurance product. what we typically call them as ULIP, unit linked insurance policy. And when we say market, we're talking about the financial market. That includes your equity market, debt market, money market, etc. Now, ULIPs combine insurance with investment. So it's a combination of insurance and certain amount of investment benefits. Returns are definitely dependent on the market performance over the period of time. Now, there are certain money-back plans provide life cover along with periodic payout during the policy term. Choosing the right type depends on your goal, of course, what you want to achieve out of it, what are the type of risk, the amount of risk you want to cover, all this factor to be considered before you plan to buy an insurance policy. Whether that's a pure protection, guaranteeing savings, or growing your wealth along with the security, as we mentioned, the ULIP, etc. So that absolutely depends on your personal financial profile. I hope this video helped you understand the basics, just basics of insurance in India and how it works. Here are, I would say, a couple of answers to the frequently asked questions by our viewers, even our fellow worker, friends, families, etc. So I just wanted to came up with a couple of question and answer for you to understand this better. So number one question, is it better to buy term insurance or a money back plan? The answer is term insurance is ideal for pure protection at a low cost, while money back plans offer both life cover and periodic return. Let's say if you don't go about securing some profit or some capital appreciation, and you are looking for only a pure protection, then definitely term insurance is the product for you. Now, if you need a combination of both of these, then the money back policies, ULIPs are the product that you go, the endowment policies, etc. But I never suggest an insurance policy when your target is to improve increase your capital, earn some profit, that wealth creation. That is not what the insurance policies are all about. So it's in my view, it's pure protection that one should look at it. Choose based on your, of course, financial goal, whether you want to secure a pure risk cover or a saving component. The second question, can I have both life insurance and health insurance? Absolutely. In fact, experts recommend you have both. You should have both. Life insurance for family security and health insurance for medical emergencies. We know the cost generally incurred by us when there are health crises, we suffer illness, we know the hospital cost, etc., the medicine, etc. So definitely we must have adequate health insurance in place along with your pure protection of life. Question number 3, is insurance only for older people? Of course not, right? So we know, you don't get health insurance policy after 55 or 60 years of age. Even if you get it, it's very difficult to, pay off the yearly premiums, because these are very costly policies, and many of the facilities, the benefits are not added to your policy as you get older, right, year after year. So the younger you are, the lower your premiums. It is smart to start early and lock in a policy while you are healthy, so that you pay less premium and you get all the benefits as per your requirement. So these were a couple of questions to help you understand what we should do in terms of insurance policies, etc. To summarize, insurance is not an investment vehicle. First of all, your capital does not appreciate with typical insurance product, right? So except ULIP type of product that we already discussed. Number 2, insurance should not be bought only to claim tax benefits, right? So if you want to buy a policy just to take advantage of the various section under Income Tax Act where you get the rebates, I don't think that's a smart move, because you have other vehicles, investment vehicle, which are even more better in terms of return, and the tax benefits are also there. In my view, rather, insurance should be part of your overall financial planning. I mean, overall bundle of the financial product that you have. Insurance should be primarily part of that, and the planning should be to mitigate various life risks, right? Various incidents, etc. If you have any question, drop them in the comments below. If you want to know more about health insurance, more about life insurance, in a particular plan, do reach out to me and write your comments below. Thanks for watching. Stay tuned for more insightful videos in coming days. Thank you so much.